Is there a big storm brewing in the equity markets? Right now, the equity markets seem to be focused on what the Fed might or might not do with interest rates for the rest of the year. But does this make sense? The PCE numbers came in as expected to slightly soft this past Friday, and the equity markets reacted by moving higher for the most part.
Yeah, it looks like personal income coming in at on target at 0.3% versus March, which was not revised down. I expected it would be, but came in at 0.5 as previously pointed out. Overall PCE price index at 0.3. That is spot on with the prior month and spot on with expectations. And the core, the key one here, coming in at 0.2%, again, according to expectations.
The Fed isn't going to raise interest rates in an election year. You can count on it. So why were the equity markets starting to falter? And will this softness continue after a nice upward move this past Friday? To better understand what's going on, let's take a look at the metrics to see what they're telling us right now about the health of the stock, bond, gold, and crypto markets. So if we take a look at the equity markets over the past 5 days, you can see that it was just a terrible week until the PCE came out on Friday, and then you can see that everything launched higher. Pretty much everything launched higher. So while this looks like an unhealthy risk appetite for equities up until Friday, you can see that there was quite a turnaround here, and hopefully this will continue. And we'll look at some of the other metrics because they tell a more complete picture here. If we look back over the past month, you can see in general we had a fairly good, healthy appetite for risk, with the NASDAQ finishing on top, S&P second, small caps third, Dow fourth, and ARK Invest is still wallowing. If we look back year to date, again, very similar picture to the last month. You can see that all the indices are higher while ARK is down substantially year to date. And if we look at the 1 year performance, very similar. NASDAQ, S&P, Dow, small caps, and ARK right at the bottom. And how does this show up in the current bottom dynamics? Well, if we take a look at the bottom dynamics, you can see that the confidence level has been all over the place. It was really low back here, down below 60 for sure. And then you can see it shot up back up into the, call it high 80s. Maybe it touched a little bit above 90, and now it's falling off again. And you can see that we had a bottom forming indicator shooting up here, and you can see that the markets were pulling back. But now that bottom forming indicator is falling, and the bottom confirmation signal is starting to go up, but the confidence level is falling. So that doesn't look really positive going into next week. You'd like to see the confidence level going higher as the bottom confirmation moves higher. If we look at risk versus opportunity, this is very encouraging. You can see that risk acceleration, this yellow line, has just fallen off of a cliff here. This is really very encouraging. And opportunity acceleration is moving higher very quickly. Now, what I also like is that risk, the red line, is starting to roll off, and the opportunity level is starting to move higher. So this is very encouraging going into next week. And what if we take a look at equity versus safety? Well, there's some cause for concern here. Let's put the overlays on. So if you take a look at this, I like the fact that the NASDAQ is right up here solidly in first place and has been for the last 3 weeks. I don't like the fact that small caps have been kind of meandering lower here. And I think it's really going to take lower interest rates before these small caps are really going to join into the rally in a big way. But what I really don't like here is I don't like that cash is now up here in the number 3rd spot. When cash gets up here in the top part of this table, that's usually not good. So hopefully this will turn around next week. And if we overlay the Dow and the S&P 500, you can see that the S&P is up here in 2nd place, but the Dow has absolutely collapsed down to 10th place. And if we look at safe haven assets, you can see that we had a very healthy relationship back here last week with EDV up here, TLT, cash, and short-term and intermediate term treasuries down here at the bottom. But now this week, long duration treasuries are still ahead of 20-year bonds. So these are very long duration. These are 20-year bonds, intermediates. But I don't like the fact that short-term treasuries and cash have moved up. This is starting to not look healthy. So how does this show up in the buying and selling pressure for equities? Well, you can see the Dow moved higher on Friday, and the selling pressure, which was way up here, absolutely collapsed, and the buying pressure started to move higher. And you can see back here, we had a rising Dow back here, but you can also see that while the price of the Dow was rising, the selling pressure was also rising, which is a divergence. So I'm not surprised that this is pulled back here. What about the S&P 500? Well, a very similar picture. You can see we had rising prices here, but you can see even before these prices really peaked out here, the selling pressure started moving higher. But on Friday, the selling pressure collapsed, and the buying pressure, this solid gray line, started moving higher. So this is encouraging. What about the NASDAQ 100? Well, you had a divergence. Look at this. Rising price, falling buying pressure, rising selling pressure, while the price was moving higher. I'm not surprised we had a pullback here, and I'm not surprised that the selling pressure is now above the buying pressure. What about small caps? Small caps have been kind of more meandering. If you look at this over this 2-month period, they're kind of flat to nowhere, and you can see that the selling pressure is above the buying pressure, but you can see on Friday the selling pressure started to collapse, the buying pressure started to come up. So this looks encouraging. And what about ARK Innovation? Well, it's just been terrible. I mean, you can see it's not even sideways, it's down over this 2-month period. And you can see the selling pressure coming up very strongly here, while the buying pressure has just collapsed. So this does not look good going into next week. Let's take a quick look at sector rankings. I'm going to just skip over these. You can pause if you want to see this and take a look in a little more detail. These tend to act very slowly. They kind of give you a glimpse of where things have been, kind of in the rear view mirror, rather than more of a sense of where things are going or what they're moving toward. What if we go to sector rank acceleration? So these move a little bit faster and kind of give you a sense of where things are headed. So let's put a couple of overlays on here to kind of get a sense of what's going on. So what looks good when it comes to sector rank acceleration? Well, the fact that consumer discretionary has moved up, that's good. And the fact that semiconductors have moved way up. Now, look, this is, I think, in large part due to the big AI chip revolution that's going on right now. And you see that in the price of NVIDIA as well. But the semiconductor ETF has really moved higher here. So that's a real bright spot. So what doesn't look so good? Well, a lot of things, as you can see. So the worst part is you've got ARK Innovation here has moved down quite a bit. You can see that cash has moved up quite a bit. So these two parts right here are really the tough part of sector rank acceleration. Now, what's a little bit more mild? Well, you've got emerging companies, both of these, moving down basically one slot. Not terrible, but not great. But then you've got the NASDAQ 100 moving down 2 slots. That's not great. You've got XLK, which is also technology, moving down 2 slots. Not great. And then you've got consumer staples moving higher, which is not bad. I mean, those are still equities, but you really want to see consumer discretionary moving higher, consumer staples kind of staying put and going nowhere. And what about treasuries? Well, if you take a look at this, you can see that they ended the week mostly down. The longer duration treasuries both finished lower for the week, while shorter duration all finished higher. But you can see that back here, somewhere around, where is this, Monday, Tuesday, Wednesday, somewhere around middle day Wednesday into Thursday and Friday, these longer duration treasuries really started to move higher. So if this continues, we'll have a very healthy appetite for long duration treasuries. What about over the past month? You can see we had a really nice rally attempt here. They basically crashed and have started moving higher again. And what about year to date? Well, we're still not in a great place, but if you look back here they've kind of moved higher and then pulled back and are moving higher again. What about over the past year? Over the past year, we're still, again, not in a great place, but we're down 16% over the last year. And in order for these to get back to just zero, they'd have to go up about 20% or so. So that's a pretty good run for a safe haven asset if that's, in fact, what happens. And what about the buying and selling pressure for treasuries? Well, you can see that short duration treasuries have been on a very nice, gentle rally here. This looks great. Even though the selling pressure was above the buying pressure, it has since collapsed, and the buying pressure, this solid gray line's moving higher. Intermediate treasuries, you can see the buying pressure moving higher here on Friday, along with a nice move higher in the price. Now, intermediate to long duration, 7 to 10 year duration treasuries definitely moved higher on Friday. And you can see that while the selling pressure was well above the buying pressure, that's starting to moderate now. And then if we look at long duration treasuries, 20-year bonds, price moving higher, and the selling pressure is staying stubbornly above the buying pressure. And what about that inverted yield curve? Well, if we take a look at it, we're kind of where we were about a month ago. The blue line is where we are now. The red line is a month ago, and they're just about on top of each other. And you can see that the inversion is still running, mid to high 30 basis point range. So it's not going to resolve for quite a while till the Fed starts lowering rates. And speaking of lowering rates, what does the market think the Fed's going to do? Well, obviously in June, 1 week, 2 days, 19 hours, and 54 minutes from now, the Fed is very likely going to just leave rates right where they are. And I don't think anybody will be surprised by that. And if you go out to July, there's a little bit more of a tilt toward a rate cut, but not much. And then if you get out to September, finally, the idea that rates could be where they are right now is less than 50%. So more likely that we'll have some sort of a rate cut in September. And then if you get out to November, it gets even more pronounced. I feel like I'm afraid. And what about gold? Well, gold has been all over the place, as you can see. Look, we had a nice rally here. I didn't think this would last, and it hasn't. And you can see, in fact, that the selling pressure has moved quite a bit higher, and the price has just collapsed and is heading lower, even though the selling pressure is declining. Now, if this selling pressure keeps declining, this will turn around and eventually go higher as the buying pressure increases. But we don't know where this is going to go next week. And what about Bitcoin? Well, Bitcoin has been going through a very long consolidation here. You can see that the price has moved sideways to slightly down over the last couple of months. And the buying and selling pressures really have been just kind of trading places here. But we're in a place right now where the selling pressure is moving higher and is above the buying pressure, which is declining. So that doesn't look good. That doesn't mean it's going to go down next week. Could turn around and go higher, but it just doesn't look, I don't see any momentum here, either to the upside or the downside. If there's one thing to take away from my market reviews over the past several weeks, it's that the equity and bond markets have softened, but based on the price action at the end of last week, things could be starting to look a little brighter. This is why I caution you to be an investor rather than a trader who tries to time the markets. Investments and investing aren't that complicated if you know how to allocate your portfolio without destroying your returns and getting little to no protection from downside risks. As an investor, you need to take the long view and allocate according to your risk tolerance, rather than fretting about what's currently happening in the world or what everybody else is doing that you read about in the media with their portfolios. If you want to be a better investor, I discuss how to allocate your portfolios in 2 key videos linked in the pinned comments below, titled The Ideal Portfolio Using Just 2 ETFs or Mutual Funds, and The Ideal Portfolio Using Individual Equities. Again, link in the pinned comments.
Stay up all night, gotta work now. Make up my mind, then it turns around. Say that I'm fine till I burn out. Thinking this money sounded so nice. Ambush here in the strobe lights. Pay anything for the high price. This life feels like the sunny water.